Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q1 FY26 post-earnings conference call of Brand Concepts Limited. Today on the call from the management team, we have with us Mr. Abhinav Kumar, Whole-Time Director and CEO, Mr. Navendu Chakravarti, COO, and Mr. Manish Peshwani, VP Commercial. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the quarter that went by and the plans and vision for the coming year, post which we will open the floor for Q&A. Over to you.
Hi, very good afternoon, everyone. And thanks for joining our post-earnings call. See, there were a lot of positive developments in the quarter. We had, we signed a good brand, a marquee brand in our portfolio, which had promised that we would be signing a few brands in this year. So first quarter, we've signed Off-White, very, very proud moment for us, because it is a very marquee brand, recognized for its streetwear fashion. It's into the luxury space, and that marks our foray into the luxury space. It's a franchisee agreement, so it's not a license agreement where we'll be designing, developing the products. It's going to be more on the import model, and hence we'll be opening stores here and obviously also distributing the brand across various channels. So that's Off-White for us. It opens up a whole lot of possibilities for us from a future perspective. Then, in terms of, again, new brands, we launched Juicy Couture. Primarily the launch campaign and everything happened in this quarter. So we've launched Juicy Couture, which we had signed last year. And touchwood, I'm happy to say that the response that we are getting in Juicy Couture as a brand is very, very encouraging. We're getting a very good response in the Juicy Couture line, both online as well as offline. Then, we've also expanded our footprint. So we've opened more stores. We are taking marquee locations. We also launched our first airport store. So we launched our first airport store in Bangalore and T1, the Bangalore airport T1. And as recent as last weekend, as in this week, rather, we've opened Bombay T2 as well. So we've opened a store in Bombay T2. We've expanded our footprint in Bombay. So we've also opened the Oberoi Goregaon store in Bombay. That also operational. So we're securing these marquee locations. We're getting good locations. And we've expanded our footprint over there. Then Q1 also marked the successful trial of the hard luggage manufacturing facility. So all trials were successful. Even our the lab for our quality control, that also is completely functional, fully operational, and we have a state-of-the-art facility even for our quality, internal quality control. So all that became operational, and we've commenced on full-fledged production in the month of July. So the full-fledged production has commenced. Though we've not yet reached our maximum capacity, we might take another couple of months to reach our optimum capacity, but we've begun well. So, and then, of course, reflecting on the results, I think after COVID, this is the first quarter where we've showed losses, and part of it was already budgeted. We had expected the quarter to be a little slow, looking at the overall market sentiments. So just answering on the result, I think it has been on 2 or 3 counts. One, obviously sales taking a dip here, and there were margin pressures as well. So, and cost of operations on account of new stores, new hirings, strengthening the talent pool further, marketing. All of this, obviously, the costs have gone up and the revenue has come down, and that's the primary reason for the losses that you see. We also experienced that in April and May. We were still sort of holding on to our pricing and the pricing strategy of the competitors in the market continued to operate at a very low price point. The price points did not sort of come back. And generally what happens is we took this call, had informed everybody that we're taking this call of not participating in this. So we waited, but what happens is this entire thing had started in September 2023, right? So this September, October will be almost 2 years when such kind of pricing has prevailed in the market. And 1.5, 2 years of time is a good enough time for the consumers to start sort of relating to a certain price point of the product. And hence, in the month of June, we said we will also have to rationalize our pricing. And from June onwards, we've rationalized our pricing. We've corrected certain prices in the market, and we've started seeing an uptake. We've started seeing, in fact, just to share a figure that June alone contributed to more than 40% of the entire quarter sales, right? So, and we saw a jump from last year June to this year June. So it was a positive outcome. So while we were degrowing in April and May, overall at a company level also we grew in June, and I'm very happy to share that we are continuing to grow even in July. And hopefully we should be able to continue to grow now at a healthy pace, and we should be able to sort of bounce back and overcome whatever the dip in performance that has happened in Q1. So the team remains very optimistic that we should be able to sort of annualized, we should be able to come back on a growth trajectory. Having said that, if I remove trolleys, luggage per se from the picture, we also see that we've grown in all other categories, including one hero which has come out is probably backpack. With manufacturing coming as a backward integration, our supply chain improved, our margin intake also has improved, and because of which we've seen a very, very good jump in our backpack business in terms of the overall sales volume, both volume wise as well as value wise. Apart from that, from a channel perspective, I think it's the traditional trade which still sort of
Really under pressure.
is reeling under pressure. However, all the other channels have shown a positive trend. So we've grown in all the other channels, right from e-commerce to modern trade to our own stores. We've grown over there. So overall, from June onwards, I think the trajectories have changed, and I hope that we are able to sort of post good numbers from Q2 onwards. Yeah, that's it. I think we'll have a lot of questions, so we'll open the session for Q&A.
Thank you. Whoever wishes to ask the question, please raise your hand or put your request in the chat box. We'll take the first question from Naisar Parekh.
Yeah, hi, thank you. Hi, Abhinav. My first question is that, till, like you mentioned, I think till last quarter, we were very adamant on pricing.
Yeah.
And we were hopeful that pricing will correct to where we are. So what do you think, looking back, was it a mistake that we made? Was it a error on part of judgment to say that maybe prices will correct and we didn't bother to change our assortment to kind of match the pricing that was prevalent. And now that we have to reduce the prices and we have to take a hit on the margins as well. So how do you look at this whole situation?
I would say partly yes and no. Partly I would say yes, probably it was what I had expected was that such kind of pricing will not last for too long. So we were expecting that probably, once players who had unsold inventory and who wanted to sort of clear out all those inventories, and once that scenario sort of eases out, things will start looking better. How long can you continue on such kind of pricing? But so partly because of that, yes, it was. I had expected that it will bounce back earlier. It did not. Right, the consumer sentiment also remained tepid, and hence it did not really help the overall cause. So partly yes, I admit that it was probably a judgment error as well. But at the same time, we also feel that, like right now, once we've reduced our pricing, it has created a margin pressure. But now I'm very, very hopeful with my manufacturing kicking in that we'll be able to negate these margin pressures in the very near future, right? Once your plant is fully operational and things start happening and you start, localizing your production, we should be able to offset this margin pressure. So, taking this call 1 year back or 6 months back would have not been very easy for us, considering the fact that we did not have our own manufacturing. So now with the back of that, and where we are looking at further expanding also in terms of manufacturing, PC is the one that I told you about, that we've done the successful trial and everything. We've already ordered a PP machine also, so we sort of very soon, another few months, and I'm very hopeful that we should be able to start PP manufacturing as well. So as we are strengthening the backend, taking such calls become a lot more easier.
Right. So, I mean, just are we doing anything bottoms up level from design and sourcing and ensuring that we are able to fit into this pricing and still get back to our 11-12% margins? Manufacturing is one thing, but the hope with manufacturing was we'll push our margins even up. So
Yes.
my point is that added benefit of manufacturing still should come through. But other than that, also, shouldn't we be doing something so that our blended margins actually get to a 14-15% level where that we were thinking after in-house manufacturing?
You're absolutely right, and we are working towards it. However, it'll take a little time. When we set up a manufacturing in-house, it's not only that you bought the machine and you have the workers and now you have the mold and you start manufacturing. There are at least 40 different components which go into a bag, right? So setting up the entire component base, the supply chain, getting those components directly. What happened was earlier when you were going to a manufacturer, a lot of these components were sourced by those manufacturers, right? So you never knew what kind of pricing they have, what kind of margins would they have. So now when we are setting up the entire supply chain ourselves, for example, we'll be probably the first factory in the country to get into a direct sort of an arrangement with one wheel supplier, which is Hinomoto wheels. We were the first ones to use Hinomoto wheels. It's a Japanese patented technology. Today, new age brands, for example, Mokobara advertises Hinomoto wheels a lot. So we are the first ones who now have a direct tie-up with Hinomoto, right? Supplying to us. So they opened a canopy, they opened a mold for us, and now those shipments are starting to come in. So, to sum it up, yes, bottom level grounds of work is happening, and you will see these things bearing fruit in the next 6 to 8 months, 6 to 9 months.
But Abhinav, we've been hopeful for this since like 2 years. And every time we are hoping that next 6 months will be different. Now, versus that, you look at Safari, they grew at 17% this quarter with 15% margin at a 500 crore base. So, I mean, the success that we had initially, I'm just hoping that that is not, coloring us or keep making us overconfident where we are not making fundamental changes which should be necessary in this environment and just being more hopeful than I don't know. But given our base is so small and given we are adding so many brands, we are adding so many stores, and after that also when we are not able to show growth, when leader is growing at 17% at a 500 crore base, I think that there is maybe something is wrong which we should kind of try and accept and find some real solution to it rather than hoping that markets will get better.
No, see, if you talk about Safari, Nisar, one thing is very clear that if you look at any sort of segment, you will realize that segment at the bottom end of the pyramid is the biggest pie, right? So comparing ourselves to them probably might not be the right sort of parlance, right? You have to look at it from a price perspective. Like, for example, if I talk about certain other premium brands, one of the largest brands in the country, and they've degrown, by a mile, right? And I'm not saying something which is not common knowledge. It's been published, it's been in the papers, interviews happened, and all of that, right? So, considering them, if you look at our performance, I think we've still fared well. This is the first quarter where we've sort of degrown, right? And as we speak, from June onwards itself, we are back on a growth path, and we are very, very. I have to say a word hopeful, no, because I can't say that okay, we will do this much. We are all trying for that, but at the end of the year, I think we should be on a good growth path.
Okay. Thanks, Abhinav. I'll come back in the queue.
Thank you. We'll take the next question from Resha Mehta. Resha, you can ask. Resha?
Yeah, thanks. Good afternoon. So, the first question is that, most categories, if we see, they essentially, the premium the premium segment of, different categories are growing, have been growing, much faster than the mass side, right, for most categories. While luggage is something that has bucked this trend over the last 2 years, especially post-COVID, right? And that's why we see the likes of Safari, they've probably done better versus, more premium players in this space. So why is it that, luggage, the premium segment has not grown unlike, a lot of other categories? Is it that, we've not done a lot of product innovation or given reasons to consumers to upgrade, or what is the problem? Because premiumization otherwise is a trend across.
Correct. So this is a very, very relevant question, Yaresha. Because we, being in this premium segment, we keep asking ourselves these questions. See, if you look at whether it is apparel, whether it is watches, whether it is footwear, whether it is whatever, there we're seeing a trend that it's not that mass is not growing over there. Zudio is a great example over there of what they've done. But at the same time, premium end of the market, it's sort of growing, right? So you have to understand why is the premium end of that fashion market growing. The acceptance of branded and the aspiration level of that branded merchandise and owning a premium brand and or wearing a premium brand, that aspiration level is pretty high, right? When it comes to luggage specifically, while we say that, okay, yes, people are becoming brand conscious, but luggage you're not carrying every day with you to your office, right? You're only carrying it while traveling. More often than not, you check in the luggage, right? So the acceptance of brands over there, or the aspiration level of carrying a premium branded luggage, is the acceptance level is a little lower than the other categories. One day it will be probably, eventually it has to. But, and on top of it, so one, as it is, the acceptance level was lower. On top of it, suddenly with this price war, the gap between the premium and the entry was almost three-folds, right? So 3 years back, the gap difference between various different players was to the tune of somebody being higher by 10-15%, then the next player being higher by another 15%, another 15%, and we were probably at a 40% jump to our the next player. Today, we suppose we had during the period of time we moved to say a 9,000 rupee average ASP. So last year my luggage ASP was 9,000. Okay, 8,700 to be precise. Now, the consumer perception now is that you get a cabin luggage or you get a luggage for 1,500 to 2,000 rupees, which 2 years back the average pricing was 4,000, 5,000, right? So 4-5 हजार से 7,500-8 हजार की 8,500 हजार का जंप लेना फिर भी बात समझ में आती थी कि यार आप 5-6 हजार का कोई चीज ले रहे हो और आपको एक कोई चीज 8,000 रुपए में मिल रही है, 3,000 extra, 2,500 rupees extra you paid and you purchased. Now if you're getting a luggage for 1,500, 2,000 rupees and then you're getting something for 9,000 rupees, the price gap is so much that the consumer today, that's the only answer that I can come across with. Okay, it's not that I'm not saying I'm right, wrong, whatever, but my perception is that for the consumer to trade off, this price gap is too huge, right? And hence, considering all of this, we've also sort of lowered our pricing, taking hits, and all of that. So yes, that's where it is. At the same time, I would also say that we launched a new product which is priced at almost 33,000 rupees for a set of 3, right? 33,000 rupees for a set of 3, which is almost 11,000 rupee product. We've not reduced also the pricing over there. It was launched, and surprisingly, it features in one of our best sellers for last month. So really hard to pinpoint on one thing, Risha, but that would be the reason that I would believe why this is happening.
Yeah, what has happened at the same time to, let's say, product innovation or, added new funky, attractive, appealing features. Is that something that's a focus area for us, especially with Tommy, and how do we go about it? Like, do we have a team, or how does it work here? Because,
Yeah.
see, ultimately, consumers would want to premiumize if they see some added value in the product as well.
Yeah, for sure. And we also, so for example, very recently we've launched the lightest luggage yet, right? So it's a very, very lightweight luggage. So we've launched the lightest luggage yet. We keep innovating in terms of design, in terms of consumer experiences, in terms of the inner constructions, trolleys, wheels, all of that. So while we have all that approach, there was another factor that once we saw that the overall market conditions were not so favorable, we had also last year, for example, we had slowed down on new product launches, looking at the predatory pricing which was being operated, we had slowed down on our product launches, which this year we had to, again, work on a grounds up approach, tweak things here and there, so that, we get a better pricing. So we've done that, and this year, almost every month we would be having new launches. So we coming up with a good. We have a pipeline of good 8 new launches only in Tommy
In luggage.
in luggage. Yes.
Right. And our channel salience is, getting more and more skewed towards modern trade and e-commerce. So where do we see this settling, and what does that do to our margins?
See, distribution, which is the traditional trade, as I said, it still continues to, because these are small mom and pop stores. We were sort of making a very, very good headway, but with this kind of a pricing, it is very difficult for us to sort of sustain that. So I would say that that's a channel which would continue to be a little struggling,
Under pressure.
okay, under pressure for the next couple of quarters. But we are seeing a very, very good uptick when it comes to modern trade, when it comes to e-commerce, our own stores. So net we'll be able to negate that entire, that pressure from the other channels.
And any impact on margins? Overall, the margin structure gets impacted?
Because of the traditional trade, you say?
Yeah, because traditional trade reducing and modern trade e-commerce, increasing at an EBITDA level, does that materially change our margin structure?
Yeah, it actually, when it comes to e-commerce, it actually betters it, so any sales increasing in modern trade also would better our margins, because somewhere your cost of operation in modern trade is also sort of fixed, right? So a secondary sales growth over there is going to better your margins. Similar is with e-commerce, it's going to better your margins. Distribution would, from a margin perspective, I think the only factor over there would be that your sales to your fixed overheads. If your sales are not growing as much, it will create some pressure. But from an overall perspective, I don't think it will impact so much.
Right. And on the manufacturing side, so do we what is our sourcing for the small leather goods or ladies handbags and the other products basically for all the brands like including Tommy, UCB, and Juicy, and all these brands?
Yeah. So small leather goods is 100% India, and we have contract manufacturing facilities with various factories in India, which manufacture for us, and so that is completely India. Women handbag is, I would say, 90%, 95% it is China. Juicy Couture, for example, is 100% China. But a few brands, we will be doing some programs. We've started doing some programs in India, but women handbag continues to be a product category segment where we sort of still rely on China.
Right. And are we expecting more talent addition, headcount addition? Basically, just trying to understand, the employee costs that was, 12 crores for this quarter. Can this be assumed to be the quarterly run rate? Of course, inflation will keep adding over a period of time, but broadly, talent addition is behind us.
Yes. So a few people here and there, but majorly our team is in place now. And I think, 12 crores a quarter, I think you can safely assume that it's going to remain in this sort of vicinity.
Just the last one. So, on the marketing spend, so we were at 3-4%. We were planning to ramp it up to 5-6%. But, on already subdued margins or, what would that do to our margins? So, how do we have actually enough room to kind of expand the marketing spends?
See, we have in Q1 also, we have expanded our marketing. And we are seeing green shoots of marketing also, Risha. So, see, as a company, I think marketing is something that I would say that we don't have a choice of not spending over there, right? So, there are new age brands which are coming in every day. People are setting a lot of funding, money to be burned. And all of this ultimately creates a pressure on for that share of voice. So marketing is something that I think we are taking it very, very seriously. We would continue to invest, but as I said, from a margin pressure, we will have to negate all of this with sales, with the top line growth, and hence we're gearing up. As I said, be it June or be it July, we've done a good growth.
Just on the margins front again, so at least by the end of Q4, do we expect to touch a 10%, a double digit kind of a margin, or that looks difficult for this financial year?
You're talking standalone quarter or for the year?
For the year, so the Q4 exit margin. So at least Q4 exit margin, can that reach 10, can that touch 10%? Or do you think for the full year also can we do 10%? Considering Q1 was 4%.
I think for the full year, I wouldn't be able to comment right now. I'll be definitely working towards it, but exit, yes, 10% for sure. Probably we should be able to hit that in Q3 itself,
Right.
if not Q2.
Sure.
Yeah.
Thank you so much. I'll join back with you.
Thanks.
Thank you. We'll take the next few requests from the chat window. Jatinder Agarwal, I request you to unmute and ask your question.
Hi, Abhinav.
Hi, Jatinder.
Okay. I have a couple of questions. I may take some time. The first is of this revenue. Is it possible to share how much is just luggage and how much is all other categories?
Yeah. So trolleys of 25-26 is 22.29 CR.
Sorry?
22.29
Okay,
crores.
perfect.
And which is a 30% degrowth from last year.
Okay. This is luggage, you said?
Yes.
Okay. And this is only Tommy or this is all brands included?
All brands included.
Okay. And one thing I want to understand on unit economics, right? So now, at least for the time being, it seems like the dust has settled, right? I last week checked Safari, whatever, pack of 3 was available anywhere between the range of 6,000 to 8,000 rupees, right? And when I checked our prices, we were in the range of 14,000-15,000 plus, all the way to about 18 is what I could see. Right. So I'm just trying to understand unit economics from the retail price point forward. So if I assume that retail margins or dealership margins at a blended basis, not category wise, is let's say about a third, right? So your realization would be, let's say, what, 10,000 then for a set of 3?
So you'll have to sort of at a general this thing, you'll have to assume a 50% realization. So the margin, as you rightly said, is anywhere between 32, 34, 35%, and then you have to take into account a 18% GST on top of it.
Okay, got it, perfect. So you're saying, so the 15,000-16,000 that sells, then at a company level, we should have a realization of about 8,000, right?
Yes,
And now because this moves in-house, right, in terms of production, if not today, but over a period of time, let's say 18-24 months,
yes.
what should be your normalized cost of production for this that you realize 8,000 rupees?
Okay. So it'll really depend from style to style, right?
Okay,
But I can tell you that on an average,
okay,
we would be able to produce uh, a three-piece set
okay,
from say 5,000 rupees around, uh,
okay,
5,000 rupees, to going up to 5,000. Let's not go below 5,000. I think it'll be around 5,000 with all overheads and everything taken into account. Uh,
okay.
and then it can go up to 7,500, 8,000 rupees also, depending on what kind of material, what kind of endos you're add-ons you're putting on to that particular luggage.
So in this business, right, the way I understand is the brand commands a huge premium, right?
Right.
And the commodity then sells at a 10, 12, 15% margin, right? So the gross margins in your business should ideally be much higher than someone who sells the same product as a commodity business,
Right.
right? If that is true, then where will the leakage happen? One is the leakage that you will actually pay out as royalty, which is about 10 odd percent, right?
Right. Slightly higher in case of Tommy.
Perfect. Yeah, 10, 12%.
Hmm.
Would that still not compensate for your higher gross margins that you shift the production inside?
Yeah, it would. That's the reason I said, Jatinder, that right now, probably for say the last quarter or at best till this quarter, even with lowering the pricing, we might have a margin pressure. But the day, as and when we move more and more products into our own manufacturing, will negate this. Hence, I'm pretty confident that we'll negate this entire margin pressure.
No, what I am trying to understand is now it is more like an apples to apples because we will, not saying today, but I'm saying on a normalized basis, it is more like an apples to apples because we will have production in-house and
Right?
then we are just selling it again at the store level.
Mhm.
My retail selling price is almost 2x of someone who's already earning a 15% margin, right?
Mhm.
And I pay a 10% royalty,
Mhm.
right? So what I'm trying to understand, theoretically, your operating margin should be way beyond 10%, which was the previous high that we used to have, right? On a normalized basis.
No, I
By
think we
when?
14%, 13, 14% of EBITDA as well.
Example which is taking saying Tommy 15,000 is set, which is an entry price point. 15,000 to compare करते हैं 6-7,000 की Safari 6-7,000 की in-house manufacturing and 15,000 retail price to 8,000 realization hours. 8,000 की realization and 5,000 की in-house costing is lower GP. So 15,000 is not a right.
Uh, so what is the question? एक बार आप मुझे explain करो, so I'll be able to answer it better.
No. So basically, earlier, right, there was so what you call as someone else sharing your margin, right? Because you were sourcing the product from someone else, right?
Correct.
So the manufacturer is having his own margin that is sitting outside your company margins.
Correct.
We still posted at that time in very good year quarters, whatever, something like 13-14% margin.
Correct.
Now production has moved inside,
Mhm.
right? So for my cost of production, let's assume if I was having a gross, exactly like you said, on 100 rupees, if 50 is my realization, then on 50, there was some margin that I've left for the manufacturer.
Mhm.
So let's hypothetically assume that was 5 rupees.
Mhm.
That 5 rupees has to move in-house, right? Because now it is internal.
Mhm.
So what I'm trying to understand is why can this margin now not move in a very blue sky scenario to 18 to 20% because production has moved inside, or is it because that we don't have the scale benefits because of which we will never get to those margins?
Yeah. So, see, what we are actually comparing over here are two different things. Jatin. One is we're talking about EBITDA margin, right? Now,
Yes,
EBITDA is a function of GP less your operating expenses, correct?
correct.
So, the product pricing we need to understand at the GP level.
Hmm.
Okay. So, at the GP level, suppose if I was making, for example, 50% gross margin, right? Now, I have reduced my pricing by say 10%, 15%, whatever. So now
Correct.
instead of making a 50% GP, I am probably making say a 45% GP.
Okay.
However, my cost of production earlier, because I was procuring from some other factory, right? So there and bringing it to my own factory, I will get a 15% sort of a benefit, right?
Okay.
Now, earlier what we were calculating is this 15% benefit, ideally in a blue sky kind of a scenario, should be additional to my current margin, right?
Correct.
Whereas in the current market scenario, what has happened is uh, because of that pricing pressure,
Okay.
if we have also corrected our pricing, so
Right.
for probably one quarter, you might see a 1% dip or a 10% dip in your gross margin when it comes to the luggage business. You see a 10% dip in your gross margin. But as and when you move most of your production in-house, you gain back that 10% or 15%. Right? So net, it remains same. Now, over the period of time, your economies of scale also comes into picture. Inflation also comes into the picture. Again, pricing going a little up, premiumization also comes into the picture. So over the period of time, you will be able to gain this back as well. This we are talking only at a gross margin level, right?
Hmm. Correct.
Now, the moment we come to an EBITDA level, your operating expenses today are at a certain level where uh, it is more like a hygiene level, right? It's not, we're not overinflated, correct?
Okay.
Any cost scenario, we are not overinflated, right? Where we have an overinflated employee remuneration or we have a overinflated marketing. No, everything is within the standard parameters. Okay,
Okay.
a percentage or two here and there, correct?
Okay.
So this should pan out the moment you are again, we are back into that whole sales and growth and everything. You will automatically start seeing goodness over here, right? So
Okay.
if we are able to, for example, this year from a 270, if we are able to grow at annualized, if I say that if we cross a 20% kind of a growth,
Okay.
You will start seeing those kind of numbers happening in the bottom line.
Perfect. Perfect. I will come back in the queue. Thank you.
Thank you. We'll take the next request from Amit K. Amit, you can
Hi,
unmute.
am I audible?
Yes, yes.
Yeah, so just is it possible if you can provide some color on the demand from the owned stores and franchisee stores, how it has been in the past quarter and in the first 10 days and the last July month?
So I think, as I said, see, April and May were not very good months for us. But from June onwards, we've started seeing an uptick. We are in fact, like to like, also there was a healthy growth. We grew upwards of 10% in terms of like to like. If I come to retail sales, for example, our large format stores, Q1, as in the first quarter, our secondary sales is much higher than our primary sales. So that goes on to prove that there is a strong secondary momentum. Now वो आपने Q1 में नहीं भरा, आपने जो भी वो करा corrections करे, but Q2 you'll fill that space up. So we seeing a good positive uptick from June onwards, and hope that it continues.
And I mean, is the same for matured stores as well as the new stores? How has been the demand panning out?
Actually, see the new stores which are your marquee locations, like for example an airport, right? It will not be right to compare airport store with any other store. The numbers over there, touch wood, are amazing, but it's our first airport store. Now it'll be worthwhile to see whether how is the Bangalore store doing and how is now the Bombay airport store doing. But if you compare an airport store to any small city store, the numbers will not be sort of justified.
No, I
So-
mean, new store, I mean to say the stores which opened in the past 6 months to 18 months.
Mhm.
That what I mean to say.
Yeah, so the way we track sales, Amit, is one is like to like. So any store which was operational in the same month of previous year, we will track a like to like number on that. So we've seen a strong momentum in the past 2 months, and it continues in August as well till now.
Okay. And secondly, on the production, I mean, you commenced the production. So how much is the utilization levels as of now, and what would be the incremental margin increase we may see in this year and next year?
See, till now we've come to almost a 50 to 60% sort of utilization, but we commenced only in July. So basically, we can support 3 lines over there with depending on the style to style, but on an average basis, this particular line can give us about 25,000 units a month. We've come to a run rate of about 14 to 15,000, but by next month, we should start crossing 20,000 upward.
It has 40K capacity, right?
No, 25K.
Okay.
Average basis.
And about the margin, I mean, how the margin would increase or in this year or next year from this?
So from a gross margin perspective, for example, one of the programs that we shifted to our factory, we saw almost 27-28% betterment in terms of margin. So from another factory that we were buying, and once we shifted it over here, it was almost a 27% kind of a difference. So, but I wouldn't benchmark that. My expectation is that if we are able to get anything better than 15%, it's good. I hope I've sort of answered your question.
Yeah, and any store expansion plan down the line?
Yes.
The next 1-2 year. Any
Yes.
guidance on that? including the first store of JC you opened it
Yeah.
recently. So any
Yes, we are very we're going very strong on our retail footprint. So as I said, we're opening more stores and we're very keen on opening marquee locations, and Touchwood now we are getting such kind of locations as well. We are also increasing our store size. So our first we've revamped our identity as an identity bagline. Identity has been revamped. So we're opening our first new identity store pretty soon. By the end of this year, by the end of this month, we should open our first new identity store, and that's going to be almost a 1,200, 1,300 square feet, 1,200 square feet carpet kind of a store. Whereas typically our store sizes till date has been around 500, 600, that kind of price point, that kind of store size. So this is going to be at 1,200 square feet. We are also looking at opening one flagship store this year, which will be near around 2,000 square feet kind of a store. So we really want to double down on that because the overall experiential kind of sale which happens over there, it's giving us that positive signals to go ahead and sort of invest into it.
So, so in this financial year, I mean, we are currently at 56 stores, right?
Right.
So, what's the target? I mean, any number if you can put?
I think we started the year with some 40, 41 stores. No, 43.
It's 44.
44. We started, sorry. So we started so yeah, I was calculating bagline. So 44 in totality, yes, is what we started off with. And I think we should be able to cross a 60 ka store mark, 60, between 60, 65. So attempting to open about a 15 to 20 stores within this year.
Okay. So,
Amit, I
Tommy would
request you
remain
to-
at 4?
Yes, Tommy primarily would remain at 4. Probably we might add one more of it.
Only Bagline and JC you would add.
Yes.
Okay, okay. Thank you so much.
Thank you. We'll take the next question from Yashovardhan Agarwal.
Yeah, hi Abhinavji.
Hi, sure.
Hello. Yeah, hi. So just wanted your thoughts on the industry competitiveness. If we look at 6 months number for the industry, there has been no growth, right? And thus it is also difficult for us to grow. So what are your thoughts on it, and what are the steps that we are taking to drive our sales? So if you can explain that in detail.
Right. See, you're right. When we talk about industry, we are generally, in our this thing, we are always focused more on the luggage as a segment, right? Whereas we are also there in other categories like small leather goods. We are now there in women handbags. So if you ask me from a category perspective, I think we've grown overall in terms of the category. Can you show me the category? Not the others. Show me a detail. So if I look at, we'll have a good growth happening across all the other categories, right? And our focus also is that even if one category is probably not at its prime right now, that doesn't sort of stop us from growing in the other categories, right? So if I look at, for example, our belts, wallets, our small leather goods business has grown by almost 24% in Q1 alone, right? The women handbag, it's wrong to say it's grown by 155% because the base itself was small. But we're seeing a very strong growth over there, right? Even in travel gear, if I talk about, except for luggage, which there is a degrowth. Backpack, there is a very healthy growth. We've grown by almost more than 50% over there. So there are particular categories which have probably sort of pulled us down. There is also a fact that overall पे भी अगर मैं देखूंगा ना, so when it comes to regular business, retail business, Q1 also we've grown, but it's the institutional business where we sort of degrown. So, and if I can quote figures, the degrowth is almost of 10 crores. So if I take that off, in our retail channels we've grown, right? So it's not that we're not growing. Now predatory pricing से कई जगह आपको नहीं hit करती है. अभी corporate channels में भी फिर once if everybody is seeing कि यार online में इतने रुपए में आपको luggage मिल रहा है, so then gifting के लिए आप then they also would want a particular pricing, right? So all those are factors, yes. But having said that, when it comes to our retail channels, we're growing in all those channels. In the future also, I think, we need to, while we need to uplift luggage for sure, on which I noted down all the points on which we are working, building up grounds up, getting our pricing better, being a little more competitive, increasing our spending on marketing so that we are relevant to the new age consumer. So while we are doing all of this, we are focusing also on the other categories for small other goods. How can we sort of take it to the next level? Women handbag, it is a brilliant category. All across all brands, everybody that I speak to, and everybody is saying that women handbag is like surprising them. It's going really well. Touchwood, our margins are also good over there. So we are very hopeful of exploding in that category as well. If I talk about, for example, I had spoken about this, that we are also making a shift or in our e-commerce where we are going, more marketplace driven. So while our B2B business also continues to grow strong, but marketplace business has really sort of started taking this thing. Last month, July is the month that I'm quoting. We've done the highest ever in our marketplace business. So it's really been a good month for us.
Okay, sir. And the pricing that we are currently seeing in the industry, which we thought that won't sustain. So is that has our assumption changed that this is the new normal since we have taken a price cut currently, or what are your thoughts on it?
I think it's the new normal now. I think it's the new normal. I wouldn't make the mistake of again saying that it'll get corrected. I think we need to correct ourselves. This is the new normal, because if there is a certain pricing which prevails for 2 years, then it becomes very difficult for the end consumer to, sort of, that the price perception is made. So, as our friend Jitendra was also saying that Safari has come to a 6,000, 8,000. Abhi unka 6,000 ka set is looking like, okay, they've come back to their pricing, right? Jabki aaj se 2 saal, 3 saal pehle, their average set price was around 10 to 12,000 rupees. So, it's not that suddenly from here we can again sort of jump back to that kind of a pricing. So yes, in my mind now, this is the new normal.
Okay. So, sir, since we have taken price cut and we think that this is the new normal, is it fair to assume that the worst is behind us? And since we are also looking at the sales growing in the month of June and July is also going well, so can we assume that from here on things are going to get better?
Yes, 100%.
Got it, sir. And sir, in terms of price cut, can you please quantify that how much price cut we have taken on an average and how is that going to impact our margins?
So I think we have taken a price cut of So for example, it's not only the price cut of existing styles, Jordan. So for example, in offline, generally our starting price point for a set of three was about 22,500 rupees, right? 23,500 actually. That was our starting price point in offline. So from 23,500, we now have models starting at 18,000, even in the offline kit, right? In terms of online, we are now available at 14 and a half, 15, 15 and a half. We are also populating models at 19,000, 22,000. We're gonna take a little bit of a time to get populated, but I'm sure those kind of price points will also get populated. So this is about, you can say roughly 10 to 15%, 20% in certain cases, where we've gone down. From a margin perspective, yes, on certain existing models, definitely it'll impact our margins. But as I said, as we speak, we are moving a lot of these to our own factory, and the moment we have that, at least that the dip will get negated. It might not give us additional benefit for the time being, but at least the dip will get negated.
Got it, sir. And sir, in the initial remarks, you talked about we are strengthening our team, and that is the reason why employee costs have also increased. So, is it on the manufacturing side, marketing side, designing, and what are the benefits that we are expecting from it?
See, we signing new brands, and new brands would also require some set of new teams, not again to the same extent of what's there, but some new members will be required. Manufacturing is, as you see, the new plant and everything, it's all fresh, so hence costs are going towards that as well. Plus, existing plant also, the backpack division, there also we've sort of put in a few good resources. So it's a combined effect of all of this. Every new store that you build, you then have staff over there. So it's an ongoing process, but as I had answered in one of my previous questions, whatever the level that you see right now in this quarter, it's gonna remain sort of flattish or remain in the same vicinity for this entire year.
Okay, sir. And sir, in terms of brands, we had high expectation from UCV, and currently also we have signed another brand, right? So in terms of building brands, what is the thought process that we are still open to new opportunities, or now we feel that we have certain brands, we want to scale them first, and later on when the opportunity will come, then we can think on it, because that will also require more capital, right? So what are
Yes.
your thoughts on it?
No, so Benetton, I would say that is now contributing to almost more than 10% of our overall sales. So I think we're sort of happy with the way Benetton business is going. And in fact, the parent company also is giving us a lot of confidence. So Benetton, I don't have a huge this thing. I have a good expectation from the brand in the future, and we are going in the right direction. Aeropostale, to be honest, we've not been able to crack. It's not a brand that has done well for us. The contribution and everything is also really minuscule. So Aeropostale is something that we're gonna take one more attempt. We're trying to build it online. We've failed in Aeropostale, to be honest. We've not done well, but we're still trying to. Not that I've never said that it's not a heavyweight brand. It was always a lightweight brand for us. But having said that, still I think there is a lot of this thing that we need to do in Aeropostale. We're trying for one more time. If the brand doesn't work, then as I said that being in licensing, the advantage is that you're not married to one brand. You don't stick to that, right? So if we have to consolidate, get out of a few brands, we'll do that.
Got it. But are we still looking to sign more brands, or like we are happy with the current portfolio that we are having?
Uh, there are a couple of ones in which I had mentioned earlier also we are in advanced stages, but we stop at them. So there could be one or two more which might get converted, and then we stop.
Okay, so got it. And sir, on the similar
Yashovardhan,
lines,
I'll
what would
request
be
you to join the queue again.
got it? Got it. Will back with you. Thank you.
Thank you. We'll take the next question from Aman Jain.
Good afternoon, sir. So the question is that given the acquisition of VIP Industries, what changes do you foresee in the competitive landscape, and how this might affect Brand Concepts Limited growth strategy, brand partnerships, and the channel expansion over the next 12 to 18 months?
I think with with VIP's acquisition, and I think it's a good news for the industry overall, because now they'll be on a path to resurrect the brand. They'll be on a path to course correct, right? And the management going in hands of new age people. I think it's going to be good for the overall industry, and likewise for us. I sincerely hope that VIP at one point of time was a brand to reckon with, and not an entry level sort of a player. So if they start course correcting, they start correcting their sort of pricing, their imagery and everything. If they course correct that, I think it's going to benefit all of us, and we for sure are going to be benefited on the most.
Thank you, sir.
Thanks.
Thank you. We'll take the follow-up question from Naisar Parekh.
Yeah, thank you. I just want to understand Off-White, what is going to be our strategy, especially given that the categories are also expanding. So if you can just talk a bit, in your press release you mentioned even apparel. So
Yeah.
if you can just talk a bit about that.
Yes, so Off-White we signed as a full brand, right from apparel to footwear to everything, all the categories, and we're going to be opening. So it's obviously because it is a luxury brand, so it'll have a limited sort of this thing, but we expecting that the stores that we're looking at opening of Off-White, they're going to be very, very high throughput stores, very high throughput stores. So the idea was to explore, other categories as well, explore other markets as well. And I believe whenever you have to explore or experiment or whatever, expand, it's always good to sort of explore the niche category, so that you're not suddenly saddled up with a lot of things to be done. So Off-White, the way we see it, 2 to 3 years, 3 years down the line, 5 stores in the country. That's it. That's all about it. So it's gonna have a limited.
Will it be Coco or Fofo?
Cocos? These all would be Cocos.
Okay. And is the economics like significantly different here versus other, because it's a distribution? So just financially, how does it work? Do we book revenue, not book revenue? Like, do we just book commission?
No, booking revenue. So we would be booking revenue, and it's an import model. So we'll be buying from the international line and selling over here. So it's gonna be a booking of revenue in terms of gross margins, in terms of margins. I think it's a fairly lucrative sort of a business. So it should give us a decent sort of a margin. But our contract starts from 1st of January 2026. Right. So 26 is when, beginning of 26 is when we'll be opening our first store. As of now, the mathematics look good. We wouldn't sign anything where, the commercial is not good.
Understood. Got it. A retail channel you mentioned. Okay, can you just mention the LFL growth in retail? And you also said the traditional, you lost some 10 crores institutional
Yeah.
business. So, I know there would be bulk orders, but just on the institutional side, how is this year looking? And, if you can talk about that.
So I think Nabindu would be able to answer this question better. Yes, Nabindu.
Okay, so this year the institutional businesses predominantly starting from month of April, May, and then it goes to the festive period of Diwali, the Puja and Diwali period. So we have been able to garner some good business this year again in the second quarter of the year.
So which you will see the reflection of it in this quarter.
So we have already started delivering them. So there is a positive uptake from the month of July itself.
Okay, got it. And retail LFL growth?
I think till July, if you see, or if I have to answer, for example, even for Q1, EBOs, there is a growth of almost. This is the growth of the
primary numbers.
Correct. At a primary level, probably it might not be exactly comparable, but yes, at a primary level, if you see, we would have grown in EBO at almost a 12% kind of a growth, like to like. In terms of LFR, in terms of your secondaries, again, if I talk about, it would again be in a double digit sort of a growth that we've been able to achieve. And D&D, of course, we've, as I said, we've gone down. Even in our government business, we see a good growth. We've grown by almost 12% over there as well. So all these sectors have improved. It's basically the two channels, the distribution and institutional, where we've sort of seen a dip.
Got it. And you have this manufacturing channel.
Nisa, we are running over time. We got to quickly give others a chance and close the call.
Okay,
Yeah.
sure.
Yeah. We'll take the next question quickly from Yashovardhan. Yashovardhan, please go ahead.
Yes. Thanks for the opportunity again. So the number of stores that we are opening currently, is that under COCO model and FOFO model? And how are the mature stores performing?
So most of the marquee stores or stores which are in your high visibility area of good malls, they're all going to be COCO stores mostly. And FOFOs are going to be, so hence, and the strategy also is to open more marquee stores rather than opening the distance. So to answer your question, I think going forward, it will be more of COCOs and less of FOFOs. How are the stores doing? I think I've already answered that we're doing well in terms of our store.
Okay, sir. And there's the last question on the bookkeeping front. Can you please give me the revenue breakup from brand as well as category wise?
Sorry, your voice is not very, very clear.
Yeah, hello. Is it
He
better
wants
now?
revenue breakup brand wise and category wise.
Yes, sir.
Okay. I'm not sure I can give it so openly, but yeah, you can roughly say that from a category perspective, I think almost 60% is travel gear, 35% is small leather goods, and the balance 6% is handbags.
Got it. And possible to share on the brand side?
brand side, I would say Tommy is now almost at 80%, 10% is UCD, and rest 10% all the other brands.
Got it, sir. Thank you so much and good luck.
Thank you. We'll take the next question quickly from Avi. Avi Jain. Avi, please go ahead.
Hi, good afternoon, Mr. Kumar. Hope you're doing well.
Hi, Ani. All good.
Just two questions. I know that we are running out of time. One is that given whatever I'm hearing on the call and given that the market is now shifted to a lower base of price, has your focus as a company also shifted towards introducing or focusing more on the mass brands that you already have in your portfolio, as well as in the future looking to tie up with more mass or that the right price range kind of brands? Because of late, obviously, we have collaborated with a lot of premium and luxury brands. But given the market, the price scenario of the market, are you thinking on those lines?
Very valid question, Ravi. Actually, we were in very advanced stages with a brand which was more a mass premium kind of a brand. But somehow things did not go through completely, and it is right now it looks more like that we'll not be going ahead with the license. And to be honest, when we were discussing it internally also, earlier we all were very, very gung-ho that this is the brand which will take us to the next level and stuff like that. Whereas I'm sort of now feeling relieved, because the scenario is such, and I answered this earlier also, that the pricing is now, this is the new normal, right? So you really need a very, very strong brand pull, to command that kind of a pricing. Tommy Hilfiger, for example, for us, we built it over so many years. Again, just I don't know if I can say it over here, but I'll still mention I've never hidden anything. We are again, for example, our license was coming to this thing in 2026. And we initiated the entire dialogue with them for renewal of the license as per their international listing. And now we're talking about obviously a long-term sort of license. So and by long term I mean at least a 10-year kind of a period. So the moment you have that, then the focus is that you already have a very, very strong base. With this, you already have a Benetton in your portfolio which can cater to that mass premium pricing, and specifically now with your own manufacturing kicking in, it gives us more bite, right? We've already ordered for the PP machine, which can further take the cost of goods down and help us, fight a little better in that kind of a price segment. So now, do we really need any more brand in this price bracket, or rather, we should, even if we need one brand, we should take something which is higher than Tommy. It might not become another 500 crore retail brand, but you'll be ready once the market is shifting. You'll be ready with those kind of brands. It'll give you a good margin uptake and play in that area. So that's been the off late contemplation internally. So I think we will not be focusing, or I don't think we'll be going in for more mass premium brands for at least the travel yet.
Okay, that makes sense. Just wanted to understand in terms of strategy. I mean, there is this marketing strategy, right, where you have a brand which is highly placed in terms of price, so that when the customer walks in, he rationalizes his purchase and buys that mid-price level brand. Now, in terms of your own branding, so I see currently, obviously, you have Juicy Couture and others that will be coming in. So currently, I see Tommy as the highest price brand. When you were alluding to having a slightly premium brand than Tommy, was it just to capture this price, that's this consumer psychology of, when he walks in, he finds a higher price brand, but then he settles for a Tommy because, he wants to rationalize his decision also. Or are you thinking on those lines, or I mean, because I just want to understand how does Tommy get smack some eyeballs, or how do people in this price fight kind of a scenario become comfortable with the pricing of Tommy and accepted that they're getting the best deal out of it?
Yeah. So again, I think yes, this effect definitely works, Avi, where you go into a store and you see a much higher price, and then you look at this and you feel that let me shift to a Tommy, and you feel it's a more value for money. So currently, yes, when it comes to travel gear specifically, Tommy is the most expensive brand that we have. Taking a brand higher with a different design sensibility would probably make sense from two counts. One, somebody again looking at upgrading from a Tommy should not go out of our portfolio, right? That's number one. And number two is, I think when we are here saying that we want to take Tommy as a market leader, and even if we have had to rationalize the pricing, we've spoken to the brand also and given them this thing that earlier we used to occupy the positioning of being premium, right? With the rest of the market shifting downwards, premium started becoming super premium or bridge to luxury.
Right.
So we have to course correct and bring Tommy back to premium, right? Then आपको जो पीछे करना है आपके ग्रॉस मार्जिन्स को बेटर करने के लिए, आपकी प्रोडक्ट के अंदर में वो करने के लिए, that is something that you will have to do, right? Which we'll do over the period of time. But the pricing strategy has to be that this is premium and not premium or bridge to luxury. So
Sorry,
Vinay, you saying something? So from that perspective, once you rationalize this pricing, then you need somebody or something which is a little higher, right? So we would fill those gaps.
Right. Thank you. That makes sense. And all the best.
Thanks, Abhi. We'll take the last question for the day from Ishpreet. Ishpreet, you can go ahead.
Hi, Abhinav.
Hi, Ishpreet.
Just from the Benetton UCP point of view, so now it will be close to 2 years for you of launching Benetton. Do you think?
Launching is about 1.5 years. We signed it 2 years back.
Okay. But do you think, or what are kind of your internal assessments for Benetton in terms of the revenue potential that it can have? Do you think it can scale up to the level of Tommy, or would it remain somewhere way much lower?
No, I think it can for sure scale up. Ishpreet. I think let's break down Benetton into 3 categories again.
Yeah, and also till now, where is it that the maximum sales are coming from, the trolley segment for Benetton or the backpack segment?
So again, as I said, let's break down Benetton in 3 aspects. All the 3 categories: travel gear, small leather goods, and women handbags. Now, if I look at small leather goods, across all shopper stop, across all large format stores and all of that, our Benetton belt and wallet, small leather goods, is the number 2 brand. The number 1 brand is Tommy, right? So we've already taken that positioning over there. So small leather goods in UCB is really doing really well, right? Now, when it comes to handbags, I would say that yes, we've not been, so both in handbags and travel gear, for various different reasons, we've not been able to crack it so well, right? Handbag, I think it's our own doing. We need to get better at it, right? Get at a better strategy in terms of pricing and the styles and designs and all of that, even channel. So for a long time we were hoping that modern trade would be this thing. So we downplayed the e-commerce side of it, but now we're really focusing it digitally, and we're seeing the results of it. So I would say that in the next couple of quarters, you will really see handbags slowly and steadily climbing up when it comes to as well. Luggage, we started off really well. We really started off well, but I think suddenly this entire pricing bit and all that sort of gave us a mid-air stop. So we sort of stopped, or we sort of it pulled us down. But as I said, we've not only corrected the pricing in Tommy, we've also corrected certain pricings in Benetton, and hence now it's again sort of coming back. Backpacks, if I see, we are in fact at a good growth. So overall, if I tell you from a good 45% is coming from travel gear, and belt and wallet is another almost 40 odd percent, 40 to 45%, and then 10% is all the rest. So I foresee that there has to be an uptick on all the three categories. So we bullish. I'm not saying that in the next 2 years it will become as big as Tommy, but I think we'll be on a very, very good path.
Right. And just lastly, you had last time mentioned that there were buckets that you see of CSD having a potential of 100 crores, handbag 100 crores, or institutional 100 crores. So do you still hold on to those buckets with similar potentials?
100%, 100%. I would still say that handbags is a 100 crore bucket for us. Institutional is a 100 crore bucket for us. Government business is a 100 crore bucket for us. So very, very clearly, these are the buckets that and we are working towards all these buckets.
And institutional this year also, you see there could be growth, or with the Q1 that we've seen, the overall year could be a degrowth for institutional.
Q1 was a bit of a dampener, but I think Q2 will start coming back. There is a lot of other things also in institution that we're doing. We now, in fact, and that's the reason you also see some manpower costs and all that happening. We have a person who's heading institution now. Earlier it used to be no head, So now we have a separate institutional business head, corporate sales head in our organization. He's building a team under him. We have specific distributors now, which we recently appointed, the other we are about to appoint. So catering to the entire institutional community. If you see, these IT companies, they're a huge target audience for us, but we've never sort of approached them correctly. So now with this entire channel being set, we're getting onto that path. So it's just a matter of time. Probably a few things might take a couple of months here and there, but we're very, very true to those buckets that I had said.
Great. Sure. Thank you so much. That's it from my side. All the best.
Thanks so much.
Thank you. Thank you. That brings us to the end of today's conference call. Thank you to the management team for giving us their valuable time. And thank you to all the participants. You may all disconnect now.
Thank you.
If you found this video helpful, please like, share, and subscribe to Concall India for latest upcoming Concall.